editor at Trade Finance Global. The shift towards renewable energy sources is intrinsically linked to a transformation in commodity demands. Think about wind turbines or electric vehicles. The driving force behind these crucial low-carbon technologies are metals and minerals. The significance of these resources is evident in the swift expansion of commodity trading pools, which according to McKinsey generated more than $150 billion in gross margin in 2023. Now, despite the steady expansion, the metals and energy industries are navigating uncertain waters. New regulations add to this uncertainty, such as the EU's Corporate Sustainability Reporting Directive, or CSRD, the Carbon Border Adjustment Mechanism, CBAM, and the Securities and Exchange Commission's Climate Disclosure Rule. In all of this, the need for carbon data has never been so important. Not only is it important for compliance-related reasons, as regulation demands it, but also because thorough data gives companies the potential to grow. For LME Week 2024, I'm joined by Adam Hearn, CEO and co-founder of Carbon Chain, to discuss the importance of carbon data. Adam, welcome to Trade Finance Talks.
Thanks for having me. It's good to be here.
Thank you, Adam. So, quick introduction, elevator pitch. Who are you? Where are you from? And what do you do?
G'day, everyone. I'm Adam Hearn. I'm originally from Australia, and I'm the CEO and co-founder of Carbon Chain. We are a carbon tracking platform for the commodities and manufacturing sectors. We help our customers get interest rate discounts from trade finance banks and meet all of their carbon reporting needs.
So, I've only had good experiences in Australia, of course. Let's start talking about carbon transparency. What does that actually mean, particularly for metals and energy companies? Why does it matter, and how do you see the role of carbon data evolving, particularly in the context of global trade and supply chains?
Carbon transparency means knowing your product and corporate carbon footprint. It's the full picture of the supply chain and corporate carbon emissions in a shareable format. Data is critical for decarbonisation and the macroeconomic opportunity that is the green transition. Companies that don't have the right data risk non-compliance, huge fines, and also missing out on commercial opportunities.
So it sounds like carbon transparency is more than just a term. You really need to pay attention to it. What are some of the drivers of carbon transparency for companies?
The list is growing. Regulators are asking for carbon information due to new carbon taxes getting rolled out. We have the European Carbon Border, fondly known as CBAM, as you mentioned, and now in full force, issuing fines later this year for non-compliance. Investors are asking for carbon information for due diligence. Banks are incentivizing borrowers to share carbon intensity for their credit lines. And customers are asking for carbon information when they make buying decisions. They need to report on carbon emissions themselves. So it doesn't matter so much where your company is located, it matters who you're selling to, as they need to deliver on their own carbon reporting requirements. Our platform acts as a secure source of truth for your carbon data, calculated and updated by Carbon Chain with a focus on compliance to global standards. If you have a central repository, you can have all of your information in one place with confidence on a single platform.
You've talked about the benefits of the Carbon Chain platform, but I guess let's go back to the problem statement from the companies. What would you say are the biggest challenges facing companies who are trying to decarbonize their supply chains?
Traceability of supply chains makes the decarbonisation journey hard. Now imagine trying to get carbon information on top of that. You're facing an uphill battle. If you don't have the right tools and experts around you, it's really hard to get started. The next biggest challenge is comfort asking your suppliers for carbon data when needed. Bigger companies out there find this easy, making the ask is easy, but they have the buying power to do so, whereas smaller companies delay the ask for fear of upsetting the status quo. So they also don't realize how rapidly the regulatory landscape is evolving and the significant fines that are getting imposed later this year. Finally, it's realizing that carbon reporting is here to stay. It's not just a fashion trend, it's becoming the law. So companies need to invest time and money, whether they like it or not. It's getting more rigid and costly each year. Starting now on your carbon footprint is the best way to overcome all of these challenges.
Thank you very much. So traceability, sharing the right data, and I guess there may be commercial implications of doing that, and also providing that reporting, which is important from a legislative or regulatory perspective. At TFG, we often talk about a just transition, or rather a transition towards a lower or low carbon economy. What are your top tips for commodity traders to help them prepare for that journey?
Taking a trader's lens, firstly, I'd say look for a commercial business case inside your organization. There are arbitrage opportunities due to all the new regulations out there. Next, use an information management system for your carbon emissions, ideally one that's aligned to your ERP or trading system, and start tracking the supplier carbon intensity over time. Over 80% of your emissions are going to be in the supply chains of your business, so you need to tackle this bigger opportunity first. And finally, look for your suppliers with lower carbon intensity than the market average. There's a market arbitrage opportunity there if you move early.
How exactly are companies capitalizing on the demand for carbon data and also low carbon products?
Regulation plus voluntary targets means customers need emissions data up front. They may even pay more for low carbon products, a so-called green premium that exists from time to time. Sometimes providing data up front equals what they need to move ahead with a transaction. Also, sustainability linked loans. You can get lower interest rates if you use the right data and strategy, but you need to have the right tools in place first. So knowing your carbon data in real time so that you can have options when planning on decarbonising your Scope 3 supply chain emissions. We've got a lot of customers realising a green premium at the moment. One of them I can talk about is Facina Rolled Products. They're a market leader in rolled aluminium products. They are able to offer products as low as 3 to 4 tons of CO2 per ton of aluminium delivered, which is impressive compared to the global average of approximately 16 tons of CO2 per ton delivered. This is an example of going beyond mere compliance reporting and getting commercial benefits for acting early in markets that are showing demand for carbon transparency.
So key theme at LME Week is probably the idea that data is the new gold. Excuse the not very good pun. How does Carbon Chain actually ensure the accuracy and reliability of its carbon data?
We're third-party audited by the likes of SGS and Bureau Veritas to ensure that our calculations are robust and independently reviewed against international standards.
Can you share any examples of how Carbon Chain has actually helped one of your clients achieve significant carbon reductions and see those business benefits?
They are able to offer products as low as 3 to 4 tons of CO2 per ton of aluminium delivered, which is impressive compared to the global average of approximately 16 tons of CO2 per ton delivered. This is an example of going beyond mere compliance reporting and getting commercial benefits for acting early in markets that are showing demand for carbon transparency.
Thank you. And final question, because I always like to throw a surprise one. So let's fast forward 12 months, LME Week 2025. Where would you see Carbon Chain to be at, and what are those medium-term objectives for the company?
We'll be helping the industry make dynamic quotes more of the norm, so creating carbon transparency across the whole market and democratizing carbon emissions information so that the market forces can accelerate us towards a lower carbon economy.
Democratizing carbon emissions. That was Carbon Chain CEO Adam Hearn talking to us at LME Week. Adam, thank you very much for joining us on Trade Finance Talks TV.
Great to be here, thank you.